Now, shares of Chinese developers experienced volatility amidst concerns over the Chinese government's efforts to stabilize the crisis-hit property sector. Investors doubted whether the measures announced would effectively restore demand and confidence. Take a look at this report for more.
Shares of Chinese developers wobbled on Monday. Investors were worried about China's major steps to stabilise its crisis-hit property sector. They feared the moves fell short of what was needed to bring a sustainable turnaround in demand and confidence. Hong Kong's Hang Seng Mainland Properties Index dropped 0.7%. It had gained around 18% so far this month, after the Politburo said in April it would work to clear housing inventory. A number of top developers saw shares drop Monday, with the likes of Kaiser and Shimao down more than 10% each. China unveiled measures Friday to facilitate up to $138 billion in funding and ease mortgage rules, with local governments set to buy some apartments. The central bank said it would set up a near $41.5 billion re-lending facility for state-owned enterprises. That's to help them buy completed and unsold homes at what they called reasonable prices for affordable housing. The central bank expects the re-lending program would result in $69.1 billion worth of bank financing. Friday's announcement came after waves of policy support measures over the past 2 years failed to revive the sector. It once made up for a quarter of national GDP and remains a major drag on the economy. A Housing Ministry publication described the latest policies as a historic moment for the industry, but many China watchers were more wary in their assessment. Analysts said the central government's decision to step in as a buyer marked an important step, but they noted the size of financing on offer pales compared to the estimated trillions of yuan worth of housing inventory across the country. Analysts say reviving home buyer confidence is still the key to a property recovery. However, one market watcher warned few entities will be motivated by Friday's measures under current market conditions. They argue demand for property is weak, with many potential buyers concerned about jobs and incomes in future.